welcoming Andy Taylor, Managing Director or Co-Managing Director, is it? I'm not sure right now, but we'll get into that in a minute, of Haydock Finance. And we're here today to talk about how to build a successful non-bank asset finance business, which I think Haydock firmly qualifies for. Perhaps it's best to start, we're going to go through a lot around, what makes a company successful. And I've had some thinking and got quite a long list, so I'd love to go through today. But obviously, there's been some recent change at Haydock, and it'd be nice to hear a bit more about you, the Haydock journey while you've been there the last 6 years. Quite a lot of growth, all of that. So, do you want to start there?
Yeah, for sure. 7 years ago, I took a call to go and talk to Haydock, and honestly, I thought, a small company in Blackburn, why would I want to do that? But when I found out that Haydock had recently been bought by Apollo, and I did a bit of research on Apollo, and I saw I spoke to John Jenkins, and it was clear that Apollo had significant growth plans for Haydock, and that really suited me. I thought this is a fantastic opportunity. John Jenkins, who's been the CEO of Haydock, has been an incredibly positive, fantastic influence on me over the past 7 years. It's fair to say, I think John would say that when we met each other for the first time 7 years ago in the IOD, and it was my first interview for Haydock, we just kind of hit it off straight away. And he's been a really strong influence on my career and will continue to be going forward. But I think John always planned probably to retire at some point, obviously, and that time has come. One of the worries I had towards the end of last year was that Apollo might decide to bring in an external CEO from somewhere else.
Yep.
And that worried me a bit, because I think we've built something at Haydock in the past 7 years that you might say is unique, because we had a culture of a small northern Blackburn business, which we had to evolve pretty quickly into a large asset finance company. And when we've talked to Apollo recently, the end of last year and beginning of this year, about how they wanted to transition the business going forward, myself and Lee Pearson, who's MD and Chief Operating Officer, we're delighted with the decision that they made, because it means that we can now bring continuity, but also develop into Haydock 2.0.
Two most important things have been the sort of the shareholders and the people. Yeah. Right now, people will get to, but I think one of the things that drive the people is the culture.
Yes.
What does culture mean? What does culture mean to Haydock? What's the journey been over the 7 years? How has the culture changed? Yeah. What have you done about it? Just give us an insight there.
Yeah, there has been a significant shift in the culture. I think that, and it's probably much to do with John Wilkinson, who founded the business 45 years ago. John, a great businessman in the northwest of England, but probably a guy who ran it his way.
Yep,
his way. And I think when I joined, and John Jenkins and Lee joined, I think we understood the need to move away from that and have more of a enabling culture where we wanted people to, and we still do. I always hate the word empowerment; it just sounds so cliched, but it is what I mean.
Yep.
We want people to make decisions. If you don't make a decision and make a mistake, how are you ever going to get any better? You've got to make mistakes as you move through your life and through your business and through your job. So we want to encourage people to make decisions and be brave. And we had a session in January with the sales and credit and ops team, trying to bring them all together and get them all on the same page. And the theme of that day was bravery.
Yep.
If you've got a piece of paper on your desk and somebody's checked it, well, why are you checking it again? And we've tried to enable that culture, but it isn't easy. It's also not for everyone, by the way. Some people like to be told what to do.
Yep.
And you need people like that as well. But I think in the main, I think we've shifted the culture from one of this is what you do to what do you think we should do.
What have you had to do to maintain that core culture in that fast growth environment?
So we've had to make some mistakes. We've took some people who haven't been right for that sort of growth mentality and growth culture. It has been really difficult, but I think it's about having a consistent message from the top, I think. And certainly the board have always had the same message outward, is that, please make decisions, please be brave, please don't be afraid to make a mistake. We know we should enjoy this as much as we can, because, we do spend a lot of time doing it. And as we've seen probably at Haydock in the last quarter, really sort of concentrating on the important core offers that we have in terms of the service that we provide, which I think is key to the market, which I was talking before, we had a record Q1 in 2026, and our service has been consistent, which for us is probably unprecedented. When we've had this time last year, when we had a record in Q1 last year, we were on 3 and 4 day payouts. This year we've been on 1 day payouts or 1.5 day payouts. So maintaining that service is paramount, is critical. And by maintaining that service, you almost then having the self-fulfilling prophecy that, right, we're really good at service, so we'll get more business. Or we're really good at service, so we'll get more business. And we're consistent. And I think that's been massive for us in this first quarter.
Digging into that and culture, culture is almost the foundation leading to service. And in that context, how does that culture and service play out to the broker market and drive that growth in your view?
Yeah, I think that the broker market the feedback that I've had anyway, for sure, and the feedback we've had in surveys and when we've gone out and asked them is that, they generally the people that deal with us, the brokers that deal with us in the main, enjoy dealing with Haydock, out of any funder, because, something that always gets said to me, and believe me, in my personal life, I've had stuff recently where it's been a nightmare. People answer the phone at Haydock,
right?
And anybody who answers the phone at Haydock actually wants to help, and that's the feedback I get constantly from the introducers that we deal with. And what we decided to do at the end of last year really was spread that message a little bit wider by bringing in a few more broker managers,
right?
Dealing with a few brokers that we don't ordinarily deal with on a regular basis, and giving them part of this that we have. And I think it's kind of worked, really. Certainly in Q1, it's worked for us. So, yeah, I think picking up the phone, I think our commercial appetite has always remained strong. We don't knee-jerk. Even recently in the past couple of weeks when, rates we all know rates have been going up. Yep. Haydock has done what we always do. We've not said, right, rates going up tomorrow. We've given the introducers a bit of a runway to deal with what they've got before we actually have to put the rates up. And I think, I think the market appreciates that approach from us. They appreciate that we're not, that we are friendly to them, really.
And I mean, do you take the same approach as you sort of said with people, where you've painted quite a rosy picture with the brokers, which I'm sure there is, but there's always going to be some that Haydock's not right for. Is it the same approach with your people, where you try some that don't quite work? Same with brokers, we're not right. And are you actively managing brokers and sort of deciding that guys, you're not right for us, and having those sort of conversations? Yeah.
So clearly, in any business, you have to not only be efficient, but look for efficiencies as well. So we monitor our brokers very closely in terms of how many proposals they give us, what the acceptance rate is, what the quality is. We've had, you may have seen it across LinkedIn, but I've seen finance companies give out awards to brokers and say, you're the best broker. Yeah, what? We've been very specific, Haydock, last year, and we've actually given awards out for the best quality improvement brokers. Mm-hmm. So brokers that have sent us, for example, deals for payout, where there was countless errors on the payout.
Yep.
But actually, we've worked really closely with those brokers, and our ops team has, and our sales team have, and we've improved that metric. So we've given the brokers awards for actually improvement of efficiencies, which helps them and definitely helps us. So that's really, really important to us.
Yeah, I think that's something that I've been sort of pushing for quite a while. I think to me, it goes back to data.
Yeah.
A lot of people are collecting very top level data around the brokers, the origination, the conversion sort of rates. But that's the tip of the iceberg.
It is the tip
and if you get
iceberg.
Access to the iceberg, the rest of it, you can actively manage brokers and drive performance that reduces your cost and increases your profitability, basically.
We have and continue to work really, really hard on that, Christian, because, at the end of the day, the more we improve our efficiencies and how many times we touch proposals and payouts, the better our service will become.
Yep.
And that's where we want to get to. And, we talk about the brokers that we deal with. We have had difficult conversations with brokers that haven't been performing to our metrics and where we need them to be. And we're not afraid to have those. If it's not, at the end of the day, if it's not right for them and it's not right for us, then it doesn't work and it won't be for everybody.
No, exactly. Makes sense. And we've already started delving into, the technology and the process, which, and one thing I've noticed about some of the things that have come out of Haydock in the past couple of years have been, there's definitely been a focus on sort of process improvement.
Yeah.
You've been through some technology change as well. But it's been very balanced, as in I've seen probably just as much about technology and just as I have seen of bringing people on board to manage process and technology.
Yeah.
Talk me through the approach there and that balance.
Yeah, I mean, there is a balance, and I think that I think I described to somebody earlier on this week that I almost think that we're actually a change business that does finance, because there's
wow, okay, here we go.
Because there's that many things that we have to consider on a regular basis in order to make ourselves more efficient and improve our service that we provide outward. And also, you know, it's no fun really for a person in Blackburn to sit on the laptop, take an email off and type it onto a system. It's no fun.
No.
So if we can make that better and make that more efficient, then let's do that. And let's get that person doing a role that is more fun, really, and is more rewarding for them. What we do is, I think we're pretty unique. We've got two customers. So we've got the broker and we've got their customer. And we always have to bear in mind we've got these two customers, because that's quite a unique position to be in. So whilst we have to service the broker and keep the broker happy and content with our service, we've also got to remember that there's a customer at the end of this that needs to pick up his truck, car, bus, van, coach, whatever it is. And we've got to remember the part we play in that. I think that we have perhaps the industry has a bigger role to play in this, perhaps the trade associations. So I think that when we bring new people into this industry, we tell them we do HP, we tell them we do leasing, we tell them we do it via brokers, but we don't do much else. So we don't really explain to them that actually that apple that's in your packed lunch there that you've brought to work has probably come on the back of a truck that's been funded by somebody.
Yeah, where does it fit?
And if we didn't fund that truck in time, that apple would not be sat there today. Or, you know, well, I know what my house is like. It's like Spaghetti Junction with the Amazon courier turning
don't
up.
get me started.
You know, so all of those times you go on to buy your clothes or whatever it is you buy from Amazon,
delivered.
It's just constant.
Asset finance is everywhere.
It's asset finance delivers that. And I think the industry struggled with that over 20 or 30 years. So I don't think we'll solve it overnight. But we play a massive part in this UK SME.
I think I see it. You know, you go to FLA dinners, you go where everyone talks at that senior level about the importance of the industry. Yeah. But the reality of why it's important is not explained to
Absolutely
anyone
not.
there.
No.
Just bring it back to the technology there. And what I'm interested in is, because I see a lot of people buying technology because they're being sold a piece of technology from a vendor, right? Whereas what you're talking about and that sort of efficiency gain and automation, etc., you know, you need the building block of actually understanding what you do today and where you should fill the gap, and then you sort of go out looking for a product. How did you guys manage that?
So it's interesting. You're pushing my buttons here. I think you know you are.
That's my job.
So technology with a purpose, right?
Good. Yeah.
So I've been to Ed's events, which are always fantastic, by the way. Over the past
plug
over the past whatever it is 10 15 years, FLA, NACFB events, and I see all the tech companies, and you know, probably not so much recently, but certainly 4 or 5 years ago, I got a bit fed up with the tech companies trying to sell me a product to solve a problem I haven't got. Yeah, I think technology with a purpose is really, really important, and I think probably the tech companies have got better at it over the past in the short past. So the past sort of 12, 18 months, they're starting to understand really where the problems are in this industry. Quality of documentation, you know, mistakes, certainly the jobs that are the less glamorous jobs, shall I say, in a finance company, like entering the data from a proposal into our system, like perhaps giving settlement figures out. You know, it can be done by machine AI. So I think they're getting better at listening to that. But you know what we do in this industry hasn't changed that much. Or maybe I'm being a bit of an old dinosaur, but I don't think it will change that much. I still think you've got a need. The SME's got a need for the asset. You've got a broker who does a brilliant job in the middle, and you've got a finance company at the other end who provides the funds. I think there's too many variables for it to ever end up as a money supermarket. You know, you go online and get the best quote. I think there's too many variables for that to happen. If you or I want a personal loan, that's easy because you go online and you get, or a credit card or whatever. But asset finance, there's just too many little variables, too many tweaks involved in it, which mean that I think there'll always be people involved, which is obviously a really, really good thing for us. And I think it's a good thing for the broker and for the SME. You know, there's a lot of talk at the moment about loan stacking and loans being used instead of asset finance. I must admit, I see some of it. I don't see as much of it as some people might make you believe.
Yep.
I do see some of it, and it's not it's not a good thing, but it's an understandable thing. But for me, it comes back to education. You know, we have to be really careful that we're helping those young people understand what we do, why we do it, and what's important, especially with, you know, the scrutiny of the regulator, which, you know, we might not do regulated business at Haydock, but we certainly believe in the principles, and we certainly abide by the principles. So I think we've just got to be really careful that we're educating new people. And when I was, my stint on the board of the NACFB for 3 or 4 years was very much towards the end was we need to get education in place.
And I think it's interesting, a couple of things that you've said there. One of them especially is, you know, that sort of inherent knowledge within the industry and that the ability or the need for there to be a few more steps in the dance and some value in the product than a pure loan. Yeah. I think, and I've talked about this a number of times, but I call it the great commoditization. I think we're doing a really good job of trying to get that out of the market at the moment, and we have for a number of years. Your business is a little bit different because you focus on hard assets more, and there's another part of the industry that does a lot, something that I would say is a step even closer to just a straight loan. So I think there's maybe some more the loan sort of carving out a gap in the industry over on that side of things. But I think you talk about, you know, the training and getting it to people. What I find is that there are so many people, and because we've commoditized the industry, or it's being commoditized, and everyone's, you know, like it's a simple product, it's an HP pretty much, right? Then it's the price can't go any lower. So everyone's focused on service to get that next pound of growth. And that means when they hire people, it's all about efficiency, and people get put into such a defined box that it's very, very hard to understand that bigger picture. Yeah. So how have you guys avoided that just plug someone into a gap, don't give them the wider picture, don't give them the context? Is it like a training program at Haydock? Is it, you know, what is there? Because I think that is what it's got to be unlocked. It's not going to be unlocked at an industry level. It has to be unlocked at a company level and an employee level.
Yeah, I think we have certainly tried on the training side of things. So, you know, we went out to our brokers 2 years ago and we did a video with them, and we specifically asked them, what's important to you? Yep. You know, and you know, what you'd expect came back, you know, consistency, honesty. When I left Hitachi and I was at ING before that, as I said, the biggest learning I had coming to Haydock was a tier, I don't know, you know, everybody has different ideas on the tier.
Here we go.
A tier 2 stroke 3 funder.
That's the best way to do it. Yeah, 2.5.
2.5, yeah. As opposed to a tier 1.5 or what I know. Yeah. So, but you know what I mean? So, we have to educate and help our people understand what it actually means to look at a set of accounts that are probably not very good. Yep. Or look at you know, cash flow or bank statements that are probably not very good, but then look across at the asset and go, that's actually quite good. Yeah. And that's a big thing. It's a big change, and it's really when you've been in a lower tier environment like I had. So, you know, my previous employers, basically, deal came in. Was the asset good? Yeah. Was the supply good? Yeah. Was the customer good? Yeah. Well, we'll do it.
Job done.
Yeah. And at Haydock,
it's nice and easy.
Yeah. well, in many ways it was, and I'm doing them a disservice because they did do all the, you know, slightly out the box deals, and obviously they had to grow to the size that Hitachi became and is today. But, you know, we stretch that envelope. And when I spoke before about the credit policy, of course we've got a credit policy, but we do make exceptions to that. And I think that's really where we win in Haydock. You know, we make sensible exceptions to the credit policy. And Ian Barr, who's our CRO, you know, it's his say, and trust me, other people have used it, 3.5 out of 5. If a deal's got 5 legs, if 3.5 of them are okay, that's a Haydock deal.
It's interesting because you said quite a few, I think, insightful things in that last piece, and you could almost say it's verging on the IP of Haydock and why you're successful. Yeah. Now we've obviously seen there's some competition holding up in your space. Yeah. I think we've seen some people from Haydock move and jump ship. You know, so how are you managing this how have you managed the competitive environment over the years, and especially now, how are you seeing it going forward? Well, we've got 7 years doing it, Christian, and that's a big advantage clearly, because we've got the data that we talked about. We've got people, and I think that, you know, people in key positions in Haydock, you know, understand what Haydock is and what Haydock does. It's going to sound like there's lots of ingredients to this, and Apollo's another. So Apollo understand how we do business, and you know, I think that not being a bank is another key ingredient to this, because, you know,
we can make our own decisions as to what we do. I think if you had a mixing bowl and you put all of these ingredients in, there's a lot. Yeah. There's an awful lot of ingredients that go into this. Yeah, I mean, it's not even a secret, is it? But the formula that makes Haydock what it is today. Yeah. But I think the key to it really is experience, data, support, people. But there's lots of it. It's, if you took people out, you'd have a problem. If you took support out, you'd have a problem. So if there's 10 ingredients, you took one out, you'd probably have a problem. But we keep and people. We've had some. We've lost people in Haydock. We lost people in the sales team, and I used to get. I remember saying to John 5-6 years ago, I'm getting a bit offended by this. I'm losing people. I was getting a bit because I'm thinking, why are people leaving me?
No, what have I done wrong?
Yeah. But I treat it now as it's going to happen, and I think it's just we probably have a somewhat inconvenient period of 3 to 6 months where we have a patch that's been covered and covered really, really well, and then we've got to fill that patch, and that's an inconvenience, and inevitably you lose some business over that period. But no, I think it's just something we deal with, and especially, and my daughter's not in finance, my eldest, but she's a prime for it. She's had a couple of jobs in the past few years. I think people in the mid to late 20s now, they are extremely, they're less patient than I was at that age. Put it that way. They think that they should be managing people having done the job for a couple of years, and that's not possible in many cases. Yep. In most cases, it's not possible.
Yeah, I think you're right. I think, and that's there's a whole nother podcast that we could do on that and how that relates. But yeah, I think so. What you're saying there basically is, yes, there's more competition, and competition ebbs and flows. As does the market. But it's not something people can copy some of what you have, right, and pieces. But the bottom line is, it's those 10 pieces, and that's what you've developed over 45 years with an extra fast bit in the last 7. Yeah. And that's something that can't be copied overnight, yeah?
Yeah, I mean, that's the key to it. It can't be copied overnight. And I mean, can it be copied at all? I'm not sure it can actually be copied at all, because I think that, it's almost the perfect storm at Haydock. You've got people that were already there that have understood what Haydock is, and people that are still there today that understand the real core culture of Haydock. And they're still there today. You've got new people that have come in from different places that understand how to grow the business and what to make it. You've got the support of owners and banks that now can see the data that's backed up, that continues to enable us to grow. There's just so many things that it's not that easy, I think, is what I'm trying to say. It's a tough job with many humps in the road that you've got to get across.
What are you doing, or has there been any enhancement or improvement in monitoring risk real time? Because I know, it feels like a bit of a thing of the past where you do your underwriting, you do the deal, and then it's sort of maybe a bit of an annual review and that have you. There feels like there's, especially with the clouds on the horizon or in the sky. Yeah. What is Haydock doing differently on that to proactively manage risk?
Yeah, to be fair, we have in the past 6 months, we have significantly increased our in-life monitoring. Mm-hmm. So we've looked at our large exposures. We visit them on a regular basis. We carry out asset inspections and audits on from a lower amount. So we used to for example, and these aren't the figures, but say we used to do it every exposure over 750. Well, that's now changed to 500. Yep. They're not the figures because I can't actually remember them. But we have tightened up on that. We've got a new auditor on board who will help us understand where our in-life business is. But we also find on that we get some opportunities as well. So we'll go and see the customer. And then we'll pass the opportunity back to the broker and say, this guy wants some more trucks or whatever.
So I think that in the market, collections is something that collections, asset recoveries, and that whole process is something that hasn't been talked about enough in the industry, probably even before the global financial crisis, because that really wasn't a credit crunch from that perspective. Where do you sit in that perspective? How are you? Is it something that's being covered? Are you building? Do you have the process and the team and the experience for something that could be coming down the road? What's your view?
So the answer to that is yes, we are. I would call our collections team robust, and I think we do. I think what they do is they're strong but fair. So if Hayley was sat here now, Hayley's our head of collections she's incredible. She does an incredibly good job. If she was sat here now, she would tell you that their first outlook on any case that falls into arrears is how can we help the customer? Now, whether that is, we let them miss a payment or we novate it or we restructure the deal, we try to help customers first, but that doesn't always work, as you can imagine. It isn't always going to work. But what we then try to do really we try to resolve it as quickly as possible for all parties. So we'll go in there as quick as we can. We'll get our assets back. We'll then try to realise the best price on those assets through various different sources, and see where we lie then. To your point, to your original question, which I think is a really good one, what we decided to do maybe 12 months ago, maybe a bit longer. So collections is it's a mysterious art, and it's a difficult art. I would not want to do that job, and I take my hat off to the guys that do it, not just in Haydock, across all the businesses. So what we decided to do was try and debunk it for our introducers. So we did a webinar about 12 months ago where Hayley, who's our head of collections, basically went through the process and said, right, this is what we do. This is what we do. We want to tell you, for full transparency, what we do. And we got incredibly good feedback on that, because it actually, we were probably the first funder who did such a thing. And Hayley wanted to do it because she probably was taking criticism from some of the brokers. Oh, you're too hard, you're too strong, you're in quick.
Definitely.
We've got to be. We're in tier 2.5 or 3. We have to be quick in there, and if we're not, we'd be doing a disservice to everybody, and we have to look after our assets. So the team, we're continuously looking at ways to, again, improve efficiencies. We have a person now solely on historical. So stuff that might have happened 5 years ago, that 10 grand might turn up out of somebody's estate, and we do really, really well on that. But I think, as I say, that go back to the first point really, is that our collections team are very robust and they're very strong, but they're very fair. And the number one thought is that how do we help the customer?
Yeah, and I think, we draw a parallel there with quite an interesting thing that you've done, and I think quite insightful with the brokers, because in that regard, it's the same as what you're trying to do with your team. You're educating them about asset finance and its importance in the wider industry and why you do what you do. Yeah. All you're doing is taking a potentially quite touchy subject between an introducer and the asset finance company and breaking it down by educating them, or just educating could be the wrong word. It's just informing them and explaining to them, this is why we do it, this is how we do it, and this is why we need to do it. And I think that is that's a collaborative approach to collections. That I think I haven't seen that personally across the wider industry. And I think I always draw comparisons as a bit different to in residual value markets. But certainly when I did some work in contract hire quite a long time ago, one of the issues when you're owned by a bank was that it was 8 years of profitability, of sort of like pretty high profitability, and then 2 years of massive losses, and then it averaged out. But you had to look at it as a 10-year cycle. And I think it's, that 8% is kind of, it's 2%, then it might go up to 15. So it's be ready for the ups and downs and invest be willing to hold the line through the cycle to be able to see the ultimate impact. Yeah, you have to. And I think that if you think about, the way the economy's been in the past 6-7 years, it's been up and down, and it's probably down at the moment, isn't it really? But, our bad debt and how many people we expect to not be able to pay us back, and our collections and recoveries has always been, on or under where we expected it to be. And our book has grown, as you said earlier, we might be at 940 million today. So, it's grown considerably, yet we're still in the same ballpark where we need to be. And I think, again, that goes back to Apollo's trust in Haydock. They look at that and go, well, you're obviously managing things well, And that's, you said it again, like 150 to 940 or thereabouts. I mean, and I think I know the answer because we've discussed it previously, but, what's the next phase, and how do you keep yourself and the business focused on that continued improvement? Because I know Apollo aren't going to sit there and go, well done, Pat, about 940, job done. They're going to want you to do that same growth even more over the next 5 years. How do you maintain that continuous improvement? Growth? So I think it's not easy. I think that in our tier of asset finance, do we
when do we when do we hit the ceiling?
Mm-hmm. Yep.
There will be some point when we will hit the ceiling. But then I think it's about the bolt-ons to that. 18 months ago, we looked at because we do broker business, but we do some vendor as well. So we've got to make sure that whatever we bolt onto the side is not going to take the broker's business away from them. We will not tread on our toes. We will never do that. So we looked at our book about 2 years ago, and we noticed that materials handling, forklift trucks, were in our credit policy, but we did hardly any of them via brokers, and I mean hardly any at all. So we thought, well, is there a market to do materials handling vendor? And we think there is, and we took on a specialist who joined us last year to do that for us. But what's been interesting since then, how it has actually turned out, is that not only has he been able to do materials handling vendor, but he's also become somewhat of a subject matter expert with our brokers. So it's enabled us to do more materials handling via our brokers, as well as doing it via new vendors, which is a very nice byproduct that we hadn't really considered. So even yesterday, we got a new guy started with us yesterday to do green.
Mm-hmm.
Now, he will do green probably via vendors.
Yep.
But we will also introduce him to all of our brokers. We think that that's the way to grow more. So we think that having some subject matter experts in the business that can do a little bit of vendor, but actually help the brokers do more in their, you know yourself, there's certain brokers out there that are engineering specialists, car specialists, manufacturing, print, audio, visual. So if we can perhaps either bring in or educate parts of our business to be more experts in those areas, and I include credit in that. So, you know, we have actually got, but we want to establish more of a couple of our underwriters to be experts in engineering equipment, a couple of our underwriters to be experts in audio visual, and so on. And we think that adds value to what the broker can sell and ultimately what Haydock can originate.
It's really interesting because I think what you've explained there, in my mind, and I don't see it enough in companies that I go and speak to and even work with, is that it's data-driven continuous improvement.
Yeah.
You know, the first thing you said was, and okay, it's an interesting way to look at data-driven, but you know, you realize you weren't doing enough. It was inside your policy, but you weren't doing it. And then you investigated it, and we need an expert in it, and you don't see the volume and then buy the person. You've got to invest in the person and to bring in the volume. But I think if asset finance companies, because we are in a spot where if everyone continues to keep doing what they've been doing, we're not growing the market. Yeah. We're just taking from each other, right? So I think people need to push into other areas and looking at the data and driving that, and then investing in the people and the systems to drive it is the only way to expand, or one of the key drivers of the continuation of expansion for you and a lot of other companies in the market.
So I'm old enough and was in this industry in 2008 when literally, and I was in ING, so we remained till 2012, as I said before. Mm-hmm. I took a phone call every week telling me that XYZ Finance had closed. ABC Bank had shut for new business. That was an incredible time, and it's the biggest change in the market probably I've ever seen, in that there was probably only one or two of us left at the end of 2008, which when you look at the landscape today and you see how many people are out there funder-wise, you think, is that sustainable? Are all those funders sustainable? I don't know, but I'm supposing and remembering history that it wasn't. And I think especially when you look at perhaps some of the bank-owned funders and you think that asset finance is such a small part of what the bank actually does. And that's what happened in 2008. You know,
absolutely.
The asset finance part of NatWest, which was still is Lombard, but was back then, it was just too small. They just said, right, we're not going to do that anymore. Mm-hmm. So I wonder is something like that somewhere in front of us? I don't know. It might be.
It's interesting. I'll get to that. I'll get to a question on that in a minute. But I think what you've explained there is a good example of going through the cycle, right? And we've had a period of 15 years since the sort of GFC got sort of the cleanup of that, where there hasn't been a crisis. Okay, we had COVID, which wasn't easy, but that wasn't, you know, a credit crisis or a funding crisis really, right? There was enough support from the government and from other things to maintain it. And I think you're asking the right question around are the number of players and the commoditization of the products, is it sustainable?
Yeah.
And I think the only answer is time will tell.
Time will tell, yeah.
Now, I'm not sure if they told you, but when you became MD, you got this magical crystal ball that came with it, and it allows you to see everything that's going to happen in the future.
Yeah.
So just wondering if you could just look into that ball and tell me, what does the next 2 or 3 years look like for the market, for Haydock, and for you?
So I think for me personally, I think I'm very excited with the new role, and I'm very happy that I've been entrusted with a significant part in continuing this fantastic journey that is Haydock Finance, because it is. So I think for me that's where I see it. For Haydock, I think we will have the support to continue to grow, but I think we need to probably manage carefully the risk and credit side of the business, because the world is not a strange place at the moment. That's the wrong word, is it?
I'd go with strange. That's one word I'd use.
I mean, you've got fuel prices, the actual volatility of the Middle East, which I actually thought about it a few weeks ago. I'm the age I am, and I remember early 90s, there was a Middle East crisis. There seems to have always been a Middle East crisis with either Iran, Iraq, or Syria.
For centuries.
I mean, it has, hasn't it? So whilst we're all clearly rightly kind of concerned about what's going on, it's always been going on, for as long as I can remember. So I think that will mean that we have to be very clear and concise on our credit profiles and our risk profiles. And I think that will be, it might even be as important as, sorting the winners out from the losers in the next 12, 18 months. I think that if some of the funders, I mean, us included, suffer significant bad debts, then I think that's what kills any finance company. The owners, the shareholders, whether it be the bank or a PE, will look at it and go, well, actually, is this really working for us? We're deploying the capital, but it's not bringing us the return that we require. And the reason for that is the bad debt. Then I think that's a problem for anybody. So I think that keep maintaining consistent and concise credit and risk profiles is hugely important. And for the market, part 3 to the question, the market will continue. It will continue to be here because it serves this. I even explained to my daughters and even my wife, we're the biggest industry that nobody's kind of ever heard of. And we're the most important industry that nobody's ever heard of, because we keep everything going. We keep the apples on you.
Keep the apples in your fridge. Come on, green and red.
But we do. We keep this going, and there'll always be a need for us.
Yeah.
And I think that the way the industry's evolved into this broker model, because the early 90s, mid 90s, late 90s, broker was a really naughty word in asset finance, because a lot of things had gone on, I don't know about before that were not good in broker asset finance. But brokers now I think personally have grown to be absolutely critical in getting the flow of cash to SMEs for their investments. And when you look at some of the way that some of the brokers have evolved, the big franchise models, they do an incredible job, and an incredible job from not only from onboarding and education and training, but also, regulation and looking after that side of things, which is, let's face it, it's more now than it's ever been, and it's probably only going to get more as time moves forward. But I also think, I think we have to, the announcement last night from the regulator about the motor finance,
yep.
I think that's probably good that that's now done and dusted and out the way. I think people have suffered. People in the industry have suffered, which is a real shame, because, I'm aware that, I know 2 stories from 2 of the finance companies. So one of them did interest-free finance, and I've had 8,000 requests for redress. They did interest-free finance on cars. And another finance company did, I'd never financed a car, I'd only financed couches and furniture, and they got 11,000 requests for redress. So that's the unintended consequence. So at Haydock, we're thinking we think we've got nothing to pay in redress because we just didn't do that type of business. But we know we'll get a lot of calls and messages and emails and letters, which we'll have to deal with, which again is something that's going to take some of our time to do, which we'll deal with.
Well, I've thoroughly enjoyed the conversation today, Andy.
Me too.
Appreciate you coming down.
Thank you.
And I think I have to say that I'm just referring everyone to Finance Connect for the full podcast, the summary, and clips. But thanks again. All good.
Thank you, Christian.
No problem.
Really enjoyed it. Thanks.
Cheers.
Thanks.